Hello everybody, April 21st, 2023. We're going to take a look at Bitcoin here. And first up, what I said on Monday. We had seen the pullback that I was looking for down into this 29K area. And on Monday, we were looking at a really nice reversal candle. And potentially, if Bitcoin kept it up, we were looking at a nice 4-hour candle. We did see that nice reversal candle, and it did start pumping. At the time I said the main scenario still is to see us press upwards higher into 30Ks and an eventual target of 48 as long as it's above 28.8. I couldn't stress that enough, right? If Bitcoin falls below 28.8, it demolishes the bullish scenario, right? That potentially opens us up for 10K. I was very long. I've deployed my capital. But again, ready and willing to bail below 28.8. Look where we are. We're at 27.2. The nice thing is I didn't even have to bail at 28.8 because later on we saw it break down and it gave me a warning sign that I could actually get out just about a break even. I lost a little bit, but not as much as I may have had I stopped out at 28.8. But even that loss wouldn't have been terrible. So let's go back. This is where I was doing the video right here on Monday, where I said we've got a nice reversal candle. And the 4-hour turned out to be very nice as well, and we saw a nice pump, right? So I was looking at that point for this to play out. 1, 2, maybe a little bit further down into this box, but then 3, 4, and 5 to continue proving the bull path. Obviously, you can see what happened here was a dump through. It dumped down to about 29K again, and that told me, all right, we just need to get out. I'm bailing on this. It's not following through on expectations. I don't expect that low to hold, and I got out right about 29.5 or so, 29.4, something like that. So again, my entry was all throughout this region. My average is right there about 29.6. So, bailing at 29.4 is really not a significant loss at all. So, this is the strength of Elliot Wave theory. It's not that it tells you exactly what's going to happen, but it tells you what to do. If this happens, then do this, right? So if this happens, then we're good. We continue upwards. But if this happens, which it did, we need to get out. We need to pair our losses and get out. And thank goodness, because now we are obviously lower. But from that point, from about the point that I got out to where we are now, we're down another 7.5%. So I've saved myself quite a significant sum by knowing when to exit. All right, so that being said, what now is it doing? And that is a difficult question to answer. So what I need to do first off is delete all of these blue markings that I have on here because they're invalid. Right? All of these little notes that I made, hoping it would follow that path, not going to happen. All right? That's invalidated, that's invalidated, this is invalidated. I believe this is invalidated as well. That's invalidated. Yeah, I don't think there's any real way for the bulls to come back impulsively from this. If you remember, I was a little bit skeptical and unhappy about how this was forming anyway, but I was willing to give the bulls the benefit of the doubt as long as they continued pressing upwards. And as we've seen, they have not. So I think what I want to do is actually jump over to the daily. Let's go to the daily real quick and start talking about some stuff on here before we come back in and kind of take a look at the micro action. So I'm going to get rid of this fib extension. I'm getting rid of the blue scenario. That's done for. I suppose suppose I can leave the orange scenario on, although I'm not really convinced that is a possibility. I've got another bullish possibility that seems a little bit more realistic than counting that as 5. So I'll tell you what, I'm going to make a new orange that's essentially the same. I just don't count that as 5 waves anymore. All right, yeah, let's do this. We're going to do this new one is going to be orange. It's still an ABC, but it's sort of a bullish ABC. I'll show you what I mean by that in a second. Okay, and let's get rid of that fib. All right, let me just zoom out here to where we topped at the 69K high. So the bullish hope was that this was A, B, and 5 waves down into C. 1, 2, 3, 4, and 5. Now what I did not like about it, and you can go back to my videos at the time, this move down for what we were looking at as 5 is a 3-wave move. And it really shouldn't be, right? We really shouldn't have a 3-wave move down, although I guess we can count the rest of these as 3-wave moves, so maybe we can consider this a diagonal down. In any case, it doesn't bode well for recovery necessarily, because it just didn't follow the normal path that it should have. So I'm kind of trying to figure out, I'm trying to simplify some things here, because a lot of these, whether we count this as 5 down or not, it may not really change things in the long run. All right. Right now, as I said, I think the most reasonable thing to say is that we have 3 up off the low. We've got this ABC. And I warned about that. I warned if this goes up to the 1.0 extension or thereabouts and starts falling and breaking down the bullish scenario, then we could be heading down to 10K. And that could be happening in one of 2 ways. The path to 10K would basically be, let me draw it on here, 1, 2. This is still 3, but this is not 4. All right, basically what this says is this is probably an expanded flat correction. So like it's A, B, and then this is C in an expanding flat. And we still have this 5 to do down here in this region. The target for that is this green box that I have drawn here. It's 12.1 to 14K. So I'm rounding to 10, but and because I expect it to kind of extend. But 12.1 to 14 is really the possibility for that to be a 5th wave if we still haven't done that. And this is actually 4th wave over here. That's a possibility. That could still leave some targets on the table above and kind of give us a bullish case if we did just kind of bottom out in that 12 to 14 area. But the problem is it breaks this line, which really kind of kills the larger impulsive move. I was willing to give it the benefit of the doubt when it just spiked that line. I didn't actually break it. But if we do break that line, then I have a lot more doubts about what's happening. So the other bearish scenario is potentially that this yellow is correct, that we do have 5 waves down already, but that is a leading diagonal downwards. We then have an ABC up as a more macro 2, and you're not going to like this. Not going to like this at all. If that's the case, this is 1, 2, 3, 4, and 5 down to a target of about $1,500. Okay, that is the ultra bear case, is that this move down, as I said, is 5 waves as an initial leading diagonal in a bear move. This is ABC up in 2, and then we're actually getting a larger 5-wave impulse down with this potential target between 1,500 and 2,200 bucks. I'm not ready to say that's the most likely scenario yet, but it is a possibility that we need to consider for sure. All right, let's get rid of that for now for clarity. I'm going to keep that on there, this kind of dangerous pink count on there as a potential thing we need to worry about. All right. I guess just for clarity's sake, let me renumber this. It's pretty much the same numbering. But, you know, pink scenario 5 down being bearish versus yellow scenario 5 down, which could have been bullish with the bottom happening there at about 15.7. I just want to have both sets of numbers on there. All right, so we have the pink macro bear scenario as a possibility we need to worry about. We have the yellow macro bull scenario. So let's talk about what this would need to do in order to still stay bullish. I'm going to move this, instead of calling this orange, let's call it yellow to match with that yellow count that I have coming down. I'm then also going to change this to yellow. It was my original blue count, but now it's my yellow count. ABC. It's arguable, debatable whether this is A or that's A. Either way, I think it makes more sense here. But as I've gone over this fib extension, for that to be A and B, we struck the 1-0 extension. I mean, that's like exactly where we expect it to top out if it's a C wave, that 1-0 extension. Not a good sign that we hit that. Even if this is A and this is B, I mean, we got darn near that 1-0 extension. So again, not a good sign. Not a good sign that we're topping out there. Okay, so bullish scenario. Sorry, I got sidetracked with how bad this is. A, B, C up in wave 1. Wave 1 is not supposed to have 3 waves. It's supposed to have 5. However, leading diagonals are made up of 3-wave moves. So that could be A, B, C up in 1. The only way that this is bullish is if we get A, B, C down in 2, we get a corrective move down instead of an impulsive one. And we're going to change that to a yellow box. And I'm going to double check that's in the right place. But basically the fib from the bottom to the top, here it is, up a little bit. Okay, we're looking for about 19.8 to about 23.8 as a target zone for a second wave pullback. Okay, so even in the bullish scenario, I'm expecting we go back down to visit low 20Ks, potentially even just under 20K, as I said. Actually, let me put a fib on there again, just to give us warning line there, and total invalidation line is right about where I have this anyway, just slightly up. Okay, so warning below 17.9, that is, you know, probably not going to happen, but total invalidation not till about 16.6. So, I mean, the real thing that we're going to watch for here is how does this decline form? Again, I'm expecting further downside. You know, we're going to have bouncing in the meantime, but this really looks like we're in what's probably part of an A wave. We need a B wave, and then we're going to get a C wave down in the best case scenario. Now, worst case scenario, that would prove something like this, or like this, is that this forms as 5 waves down and starts breaking those warning levels. That would tell us we have much further to fall. Okay, so we really just need to watch. As I said, if we get corrective action downwards into this yellow box, then we can potentially think about trying to long, even though it's really not a reliable pattern to long on. And this eventually would give us, let's just get an estimate here. Let's say we go to the middle of the box. So 1 and 2 and a bullish leading diagonal, or maybe ending diagonal. Since our target is up here, it might just end it. Basically, ABC up in a 1, ABC down in a 2, ABC up for 3 might get us to around 43 to 50 in a diagonal scenario, ABC for 4, and ABC for 5. Maybe we get back to this 60K region. Our absolute best case scenario then is that's a larger leading diagonal. We then get a large pullback, and then we go bullish from there. But we're not going to have any confidence in that until we see, that larger pullback form, basically. So as you can see, this is a lot of chop. Okay? It's not going to be fun. Even if this does turn out bullishly, it is not going to be easy. It's not going to be fun based on the setup we have right now. All right. For clarity's sake, my red scenario, we're going to I'm going to change that a little bit. Let me call that orange now. And I'm going to draw one more time, 5 waves down, but this is the one that basically says this is 3 is here, but 4 ended over here in orange, and we have one more down in 5, so it's less bearish than pink or red or whatever color that is. Since I've changed some things around, we're just going to keep that red. All right, so yellow, bullish scenario. Orange, bearish scenario down to 12 to 14, maybe 10, somewhere in that region. And then we'll see red scenario, really bearish, potential targets down in the 1,500 to 3,000 range. And that's pretty much what I see as likely paths that this can take on the macro scale. Let's switch all of this to yellow since we're saying blue is essentially done for. Get rid of all of that. I mean, all of this was probably, there's correctness within that, but it's not helpful right now for what comes next. All right, so yeah, again, try to minimize as many of these lines as I can. I don't think these are useful anymore. All right. So yeah, looking like a C wave. Again, I'm going to leave that note on there below here. Red bear scenarios in play. Okay, let's take a look at this micro and just see what we can see, if anything. All right, zooming in, micro action. Pull a fib extension and see where we are. Okay, this looks like an extended third wave. The best case scenario for the bulls, even breaking that, would have been to bounce right at about 28.6. I didn't expect it to because, as I said, below here I was looking bearish. So, we could have maybe in a weird case seen something like that and then still gone up, though I wouldn't have been happy with it at all. So I prefer actually that it has extended so far downwards, because now it tells us that's not an ABC, or very unlikely that that's an ABC. Much, much more likely is that this is 1, 2, 3, we're going to get a bounce in 4 and then a move down in 5. And whether or not this is the orange scenario or the red scenario, we just don't know that yet. So I'll put it on as red since obviously, you know, we're bearish here. I don't know whether or not this 3 is done. It may or may not be. It could continue extending downwards. We are very oversold, but we have been for quite some time now. Let's take a look at the 4 hour. 4 hours very oversold. It does have further down. It could drop, but it doesn't need to. Take a look at 12 hour. 12 hours getting into the oversold area. So, you know, we might have a little bit more to go before we get a bounce, or we might get the bounce soonish. In any case, right now, if that's the end of the 3rd wave, which again, I'm not saying it is, but if it's the end, 4th wave resistance is pretty much right here. And that needs to be red. Okay, so if we get a bounce right now with that low that we have in place holding, 27.8 to 28.4 is my expectation for a bounce. 28.760 brings some uncertainty into things, but it doesn't change my overall bearish bias until we see something else. You know, and if we see an impulse up, then I might change my bias. But it would make things more difficult again if we got above that line. So I'm going to leave that red line there because essentially that is again the dividing line. 28.760 is close enough to 28.8, which is what I was looking at before. And then target below for 5th wave is right here. So that's where we might find support again if 3 is done. And again, I'm not convinced that it is totally. But if it's done, 4 and 5, those are boxes that we need to pay attention to. Okay. So what we would expect then is 1, 2, 3, 4, 5. In a best case scenario, that is our wave A right there for this yellow. Okay. So that would get us down to approximately 26-ish, 26K, somewhere in that region. That would be the initial A wave. In the best case yellow scenario, we would then see corrective move up. And then the key is, for the bulls, whatever that plays out as, we should see sort of a 1-to-1 move down into the yellow box. You know, maybe 1-0, 1-2-3-6, somewhere in this region, right? So kind of doing just getting into the yellow box a little bit would be ideal for the bulls if that were to play out. That's a 3-wave move. That would tell me, okay, if that holds and we start moving upwards, you know, we could still go up from there, as I said, in that bullish diagonal scenario. Conversely, if instead of doing that, we get a larger 5 waves down, that tells us we're probably in either the orange or the red scenario at that point, and that would tell us to get out if we're in. I'm already out, but you know, if I got back in at some point, that would be the warning to get out, is when 5 waves down in that larger sense form, because we'd be heading down to, like I said, at least that 14K area, if not lower. All right, so I think that pretty much sums it up. So I guess, you know what, let me just draw on here. Yellow ABC is what we would be, you know, looking for, hoping for. Something like that, with 5 waves down there, then a bounce, then 5 waves down for C that don't go too far. And then either the red or the orange would instead do that being a 1 and a 2, and then 3, 4, and 5. And this would be a higher degree. Something along those lines. All right. That sums up my thoughts on Bitcoin. So a lot to pay attention to going forward to see which one of these paths is most likely going forward. But obviously not good. You know, below 28.8, as I said, was a very big warning sign. And unless something drastically changes, I am expecting at least to get into the lower 20Ks before this pullback is over. And, again, worst case scenario is 1500. So I told you weren't going to like it. All right, I'll talk to you all again on Monday. We'll see where we are at that point. Good night.